Hey everyone, Chris Johnson here with Money Morning. Today we're talking about SuperMicro Incorporated. JP Morgan just added it to their overweight list, meaning they think you should buy the stock. But I think their price target is way too low. We're going to go over that price target as well as mine, which is much higher, the three drivers behind the stock and why I think it could rally as much as 40% ahead of its April 30th earnings announcement date. Give me 5 or 10 minutes. You'll know everything you need to know about this AI rocket and why it should be in your portfolio. Let's go. Okay, so SuperMicro Incorporated is back in the news again. The stock just recently pulled back 30%. That's the second time we've seen that this year. A lot of people were asking, once again, should I be a seller right now? And the answer is no. There are three things that are driving this stock higher, and I think you could see a $1,500 price tag on the stock before the April 30th earnings announcement. Let's take a look at those three things very quickly here, and the price chart, of course. Now, SuperMicro Incorporated is entering what I refer to as the pre-earnings phase. So in other words, 2, 3, sometimes 4 weeks away from earnings, companies start to see buyers come in. They get a little bit of anticipation over what's going to happen over the next month, and especially on that earnings date. SMCI saw the same thing last quarter. This is point number one. We saw a 70% rally in shares of SMCI in the month of January, and that was ahead of their January 29th earnings report, right? So what drove investors? Part of this was the company tipping their hand a little bit and saying, hey, right in the middle of the month, earnings are going to look good right now. Our sales revenue, everything across the board for the quarter is summing up to a really good picture. That was on January 18th, 19th, and that drove the company through the second part of the month in a way that you'll see in just a moment. But that 70% bottom line right before earnings was the key. Investors priced this stock for perfection, kind of like we've seen with Nvidia, but then the company delivered, and that's the important part. It's almost like a Pavlovian response. When you give a dog a treat, it tends to repeat that type of behavior. That's what you're going to see from investors right now. Psychology is a larger part of investing than people account for. So the fact that the company rewarded that rally with incredible results and the investors got the stock moving even higher after earnings is going to tip us a little bit towards seeing that buy the rumor this month again. April 30th is the earnings date. Estimates have not been raised, and they've not told us how revenue is doing. But the moment they do, this stock is going to be a runaway horse to the upside. That's point number one. We've seen a tendency or a trend in the buy the rumor that has been rewarded. So investors are going to be in that same FOMO mode, wanting to get into SMCI shares ahead of April 30th. Second part of this is the analyst coverage. So I already mentioned JP Morgan came out and initiated coverage on the stock. Their price target is way too low, though. And we'll look at the rest of Wall Street's price target in just a second because it's important. But they came in with a price target at $1,105. At the current price of SMCI, as I'm talking to you right now, that's only about 7 or 8% higher. This is a stock that moves 15, 20%, sometimes in a day or two. And right now, JP Morgan is looking to 7% upside. That is going to be in the rear view mirror very quickly. We've seen other Wall Street analysts come in and start to pick up coverage on the stock. There were 14 before last quarter's earnings. Now you have 17 analysts, and they're all coming in with buys or strong buys, but they still have very low price targets. Again, we'll see that in just a second. Our latest initiation was this morning, but the prices are just too low. Let's look at an example or the actual chart of the average Wall Street expectation for a target price here. Right now, that's at $920, $913, but we're friends, so we'll round it up to $920. That is 14% below the current price of SMCI. So right now, Wall Street is underestimating where this stock is going. A break above $1,100, which the stock tried to do today, is going to take it straight to $1,200 because, again, psychology matters. And when you're at this price point, It's $100. It's $100 pricing increments that actually show support and resistance. Once we get above that 1200, the stock breaks through 1250. We'll look at a chart in just a second, but keep in mind that number. $920 is way too low. Wall Street analysts are already behind the ball in terms of calling where this price is going. As soon as they start to upgrade, you'll see the stock price go up because Main Street listens to Wall Street. Whenever they come up and initially tell us to buy the stock, or they tell us that their target is going up, we tend to follow that and start buying the stock even more. That's going to help to drive us into that April 30th $1,500 price target that I've got. And let me take a second, as we usually do, to make sure and tell you like and subscribe to get more content like this. We're talking about stocks either in the AI space, technology, all over the market. So make sure you stay in tune with us to get more recommendations like SMCI. So with that, let's go to the price chart. And this is the most impressive part of all three of those pillars right now. We have seen this stock just absolutely take off. When you compare it against Nvidia, SMCI is up 180% year to date. And obviously it's because of this post-earnings rally. Here's your pre-earnings rally I talked about, that 70%. But the stock going from $500 up to $1,200 is obviously what gets that outperformance against Nvidia. But as I said before, the price is telling all kinds of stories here. Now remember, I told you all the headlines that caused the stock to drop 30%. That's right here. Your second or your first 30% was right here. And this is kind of both driven by a little bit of sell the news and round numbers. Your highs here, right at the $1,000 mark. Your highs right in here. And this is when you had a few of the analysts come in and say they were buyers of the stock. Again, this is just a little bit of a crescendo and the market getting overheated on the stock. You can see all the volume that was happening here as well. This is a natural reaction to just an absolute incredible earnings report. So we saw the stock sell off. I did a video on it back then, 30%. And the question was, should we be buyers of the stock? Yes, you buy this dip. Now, we've seen another 30% here, and that's because of those headlines, the company coming out and pricing that additional 2 million shares, which happened right here. So at $875, which is what they priced them at, right in line with where the stock was trading. Those worries about the company diluting shares are gone at this point, and Wall Street and Main Street have forgotten about it. Everybody's looking forward. Tremendous growth coming from the company. And you can see we were back above that $1,000 mark, which drove a nice rally yesterday, and back above what I call the trader's trend line, that 20-day moving average. Typically, when you start to break above short-term trading trend lines like this, you see more buyers come in, and I think that's what drives us to 1,250. There is where something simple but magical happens. We start to see the stock trading at new all-time highs ahead of earnings. That will kick that FOMO, or that fear of missing out rally, into high speed, and this turns into a bit of a feeding frenzy as the stock continues to go higher and higher and higher. As I mentioned, my target right now is $1,500. That may seem like it's way out of reach, but this is still a speculative stock. It's still being discovered by the market. As much as you and I talk about it, the market is still discovering the stock, like JP Morgan this morning. And as that happens, we're going to get more participants coming in and buying the stock. When we hit that $1,500 mark, I'm going to take a look at the stock and say, hey, maybe this is a time to take some profits. Until then, I am in for the ride higher on SMCI shares. There you have it. 3 reasons behind the stock going up to $1,500 over the next 30 days or so. Number one, are the analysts coming in and realizing their price targets are lower, or that they don't have coverage and they want to get in on these moves. Number 2, the pre-earnings rally. We saw 70% last quarter. The quarter before that, we saw a rally into that earnings announcement, and the company rewarded it. Therefore, you're going to have people having that Pavlovian feel of, I need to get into the stock so I can get the reward. And then number 3, simply the round numbers. When we see that $1,100 mark being taken out, $1,250 is going to be the next one. And psychology is going to kick in and drive us higher as the company's making new highs ahead of earnings. Everybody's going to worry that they're not going to be in for that trade. $1,500 is my price target before April 30th. I might be long. I might be short on that. I might be overestimating it. SMCI is a company that I do want to own for the long term. That's it for today. Hope you got a lot of information out of this. Please make sure you like and subscribe and stick with us here on Monday Morning as we reveal more opportunities like this. Have a great day, and I wish you the best trading success.